While price didn't look overly dramatic on the surface, the final hour of trading on the NDX printed the month's highest volume candle, which suggests to me purposeful institutional positioning into the month's end. Software also held up particularly well given the broader market weakness. Now, I'm going to discuss this more in the private weekend video for the Patreon group, but I think Block's headcount reduction is something we'll look back on as kicking off the second phase of the initial AI hype cycle. Now, we've had the hardware phase, or we're still in the late innings of the hardware phase, and most technological revolutions have a hardware phase and then a software phase. And that latter software phase is what brings about crazy valuations and hype and leads to that eventual bubble that tends to pop before a massive crash. And then the technology comes roaring back from the ashes to unprecedented highs. It just repeats time and time again. And I think we're going to see that again for the AI sector. Now, the software phase for AI is going to look far different than a traditional tech hype cycle of the past, and it's also going to have far different implications for valuations. But I'll save the details on what I'm thinking there and how we can position strategically for tomorrow's video. But if we look to other areas of the market, financials definitely struggled, which isn't surprising in the face of hotter PPI, but XLF for the financial sector still does have a chance to print a higher low and potentially curve out an inverse head and shoulders pattern that will be a bit of a reversal.